Welcome, everyone, to the next episode of TheStreet's Stocks and Markets podcast, where we talk about, well, you guessed it, stocks and markets. I'm Chris Versace, TheStreet Pro Portfolio's portfolio manager. Joining me today, two wonderful, wonderful guests, two of my favorites, actually. First, a market technician and a trader. That's right, folks. Helene Meisler is back with us, the author of TheStreet Pro's Top Stocks. Got to get that right. And I will say this, it is required reading. And then old friend of the podcast, one Todd Campbell. Todd is the co-executive editor at TheStreet.com. I welcome you both as we get ready to start the second half of the markets 2025. How we doing?
Hi.
Great to be here, Chris. Looking forward to catching up more with you and talking a little bit about what happened so far in 2025. What a crazy ride it's been, and what might be coming next.
Well, let's start with that because, I think at the beginning of the year, expectations were, pretty good. Market was moving nicely higher January, February, and then we kind of hit a skid mark. We continued to fall. Especially once we got to Liberation Day in early April. And then slowly but surely, some of the uncertainties that were weighing on the market started to dial back a little bit. Lo and behold, we exit the first half of the year, the S&P 500 at a new record high. Potentially, Helene, correct me if I'm wrong, overbought?
Yes, overbought. But so we got overbought right around Memorial Day.
Oh, interesting. Okay.
And all we got out of that was basically a big chop sideways for a couple of weeks. Then last week we had that big leg up. But so in last week's big leg up, a lot of stocks didn't participate. I know, Breath made a new high and all of that.
Right.
But if you take a look, and you go through, I have a pile of charts like this. And if you were forced to go through this pile of charts every single day, you would get what I'm talking about. Because I'm putting a pencil to the paper every day. And some days I'm like, it is not even worth the lead.
Interesting.
And as you know, Chris, because we use the same pencils, these are not cheap pencils.
They are not.
When I waste lead, I'm not happy.
So,
however, let me say,
yeah.
So in terms of being overbought, yes, we've been overbought, but we eased a lot of that overboughtness by going sideways.
So kind of the pressure is let off a little bit is what you're saying.
It got let off. The problem up until today, I'm happy today. The problem up until today was that we just didn't have a lot of participation. Last week was very index-y. Even though Breath has made a new high, it just really wasn't great. Today, we have all my favorite down and outers coming on. Yay.
Okay, so we're not talking NVIDIA, right? We're not talking Apple. What are we talking about?
What's up already? What's up already is overbought.
Okay.
What's down and out, not so much. And that's because they've been left in the dust for months.
Okay.
One example, okay? Look at Pepsi. And I know we can't pull up a chart, but Pepsi has literally been bouncing along the bottom for 3 months now. And today it's having a spectacular day. Take a look at UPS, bouncing along the bottom. Today it's having a great day.
You know what? I wonder how much of that is attributed to the fact that we're just flipping the calendar here. We got a brand new quarter. And maybe some people are looking, hey, okay, I wasn't going to buy Pepsi going into the quarter end and have to show that I own a whole bunch of Pepsi in my portfolio instead of NVIDIA. Now I can, pick it up and see if I get a little bit of bounce back.
Well, we did that today in the portfolio. We actually picked up shares of TJX companies today.
Nice.
Yeah.
I mean, that's
there's always a lot of that going on at the end of the quarter, beginning of a year, or but. So we had this sort of rotation about a month ago, and it didn't last. It lasted one day. Let me tell you why I think this can last a little bit longer. And that's because in my column and my letter yesterday and this morning, I had a chart of the equal weight S&P relative to the S&P. And a month ago, that chart wasn't at the bottom the way it has been, the way it is today. And usually when it at least in recent years, when it's gotten down this low, you have gotten that group rotation.
Yeah, and you're talking about RSP relative to, right? So you're talking about as a ratio of, and I saw the chart that you posted, Helene. It was fascinating. It's really banging around on the bottom there, and clearly you're right. Nobody had any interest in some of these other baskets. It's intriguing to me a little bit that we've seen financials kicking in, and maybe that had something to do with the news that came out over the weekend or Friday or whatever it was.
Friday afternoon.
Yeah, Friday afternoon, the stress test. Maybe that just clears a hurdle. Now people can feel like, oh, I'm a little bit more confident now. I'm not going to get hit over the head by some surprising news. I can go out and buy some of those. But it is good to see. I mean, that's the second largest S&P 500 sector, right? 14%. But one of the things that I was interested in is you said we're overbought. When I used to follow you so closely when I was working on the pro side of things at TheStreet, one of the things I really enjoyed looking at was your intermediate versus your short-term overbought and oversold. And I found your intermediate kind of gelled more with my investment style. It was more of I considered it to be more of a lasting or significant signal when it's overbought, oversold. When you're saying
only because Todd, it should last many weeks to months. Yeah. Where a short term should last days to weeks.
So when you say we're overbought now, is that on your shorter term or on your intermediate term indicator?
Okay, so the intermediate term got overbought, came down. My sense now is this rally we're having, because remember my oscillators, short and intermediate term, are all based on breadth. And so this is giving us good breadth in the market, something like this. And so what should happen is that the overbought, oversold intermediate term oscillator should now lift. My guess is it's going to make a lower high.
So the intermediate actually,
and then we'll be fully overbought.
It's going back.
So we can. So for the listener, when you put these two together, it sounds like even though we're overbought, with the oscillator moving higher, as you just said, the market can still churn a little bit higher from here.
Yes, but Chris, you need to understand that it's the stocks that have been hot that move the S&P.
Oh yeah, sure.
And the stocks that haven't been hot don't budget.
Right. And for the listeners.
And so what if you go back and look at that ratio that I did, right? You'll see that when the RSP starts outperforming the S&P, it's because all those index movers come down.
Right.
So
right.
I can't tell you that the S&P is going to keep cranking here.
No, I'm not
saying right, because if the Nvidias of the world give back some of those monstrous gains, then that's going to obviously weigh down the S&P 500. But the equal weight relative will increase. So
right.
It's just sort of normal.
You may not get a lot more upside in the S&P here.
Right.
Maybe you get another 50 or 100 points, but what you're really going to get is just a group rotation into what's been down, and maybe eventually they just sort of both come together. And in the last 3 examples of when that ratio got down here, that's pretty much what happened. And then they all sort of came down together.
Okay. So what we're talking about here for the listener is, you need to really understand the differences in how some of these indices we're talking about, the S&P 500, market cap versus equal weight, are kind of constructed, what their weightings are. Todd, you kind of alluded NVIDIA, which depending on the day is number 1, number 2, carries a lot of weight in the market cap weighted one, but in the equal weight, it's just that it's equal weighted with the rest. So the impact, good or bad, is a little more muted. So the market is overbought. There's some concerns about going forward. We've got a lot of things kind of out there, whether it's the upcoming earnings season, trade deals, what lasting tariff levels are, the passage of Trump's big, beautiful bill. And as we're sitting here today, it has cleared the Senate by one vote. Now it goes to the House. Todd, which of these things or something else is kind of weighing on your mind as we kick off the second half of the year?
I think all of it's weighing over our mind and nobody really cares. I mean, you think about the way the market's forward looking, right? So it's always price. It's looking ahead. It's saying, okay, what's going to be my problem in 6 months? What's my problem in 12 months? So in April, we priced in a tremendous amount of risk, stagflation risk, recession risk. What's tariff going to do to inflation? What's the Fed going to end up doing because of that? I mean, there were just so many unknowns, right, that were weighing on investor sentiment. We got that nice oversold reading in early, when we get the RSI down to like 22, I think on the S&P or something like that. We got very, very oversold in early April. We got all those dip buyers that rallied it in. I fully admit last time I was on the show that, I raised a lot of cash into that rally into mid-April. I'm still sitting on a lot of cash because I am still concerned about all these things. I think that there are still looming threats. That being said, my beta in my account is high enough that I've outperformed the S&P despite having almost 40% in cash, which is, quite a thing. It just tells you how much risk I do have in my portfolio. But yeah, so I mean, all of these things I think are still risks that would have to be on the mind of investors. But I think a lot of it was priced in. And then we got this lockout rally. I think most people, myself included, thought we would get a higher low, kind of like a pullback to a higher low. We wouldn't get the V, we'd get a pullback to a higher low, and then we'd go again. And I was kind of looking for that as an opportunity and everybody else was too, apparently. So, as Helene likes to say, you walk up to the fence, not everybody jumps over at the same time. A couple of people scramble over it, and then a couple more people scramble over it, a couple more people scrambling over it. I think that continued to happen, and that's why we've gotten up to the all-time highs on the market now. I think that the big, beautiful bill, so-called, creates some concerns, obviously, as far as the amount of debt that it does structurally. But for the average investor, they're looking at it and saying, how's this going to save me money? Do I get a tax break? Right. That could be retirees. We're looking at the increased Social Security income tax deduction. It could be people who are living in high property tax states who are looking at that SALT tax deduction and thinking, maybe I'll be able to write off a little bit more there.
Last I saw, it's going from 10,000 to 40,000 for 5 years. Yeah,
10 to 40, and then the Senate tried to roll that back, and the House said, "No way, Jose, it's good 40 or nothing." So the Senate had to go back to the 40, and then I think with the Social Security income tax deduction, it's going to 6,000, which is a pretty sizable jump. I can't remember if it was 4,000 before or 2,000, but it's a sizable enough jump to make it relevant to people who are retirees. And that's so anytime you're putting more money in the pockets of potential investors, theoretically, that's energy that could flow into the markets at some point, depending on how sentiment plays out. I mean, Helene will talk sentiment. Sentiment says it's all, what the market does in the short to intermediate term is going to be determined by how people feel about the economy, their jobs, their wallets, that kind of stuff.
So Helene, what are we seeing on the sentiment front?
More and more increased bullishness. The one indicator on sentiment, no, not one, come on, I'm looking at all of them. But the one I'm focused on this week is the daily sentiment indicator.
Okay.
The DSI. Right now, I guess the S&P looks like it's maybe still not really going anywhere today. But the S&P and NASDAQ last night got to 82. It's a scale of 0 to 100. When you get over 85, you're sort of in the watch out mode. And when you get over 90, it's red lights flashing. Obviously, today's action, should it stick through the end of the day, is not going to keep those going up. But let's just say that when do we have the employment number? Is Thursday this week.
Thursday, yeah.
So let's just say, so today's Tuesday, let's just say, those stocks don't continue to roll over in the fashion that they're rolling over today, and we get another pop late in the week. It is possible that those numbers get up over 85 by the end of the week. if we get a pop. And if we do, connected with probably this wonderful rotation that we're getting now and the overboughtness, will probably all converge somewhere around the second week of July.
Okay, so let's think about that. What kind of a number, Todd, do we need to see on the employment report? A better than expected number or a really bad number?
Yes.
For us to pop to that?
That is a great question because, is bad news good news? I mean, that's when you get your rallies, right? When people start to look at bad news and say, hey, you know what, that's pretty good. And you could argue, I mean, there are, I think it's either Bank of America or Morgan Stanley, so I apologize to whichever one of the economists came out with this. I think they were looking at 4.3% in unemployment. That would be up from 4.2%. Obviously, the low is 3.4% in 2023. So we're losing jobs. I mean, Challenger Gray and Christmas, I think we're up to 696,000 plus layoffs year to date through May. That's up 80% year over year. I think that if you get up to 4.3%, people are going to look at that number and say, Fed cut, Fed cut, Fed cut.
Well, so that's the thing, right? I think a lot of folks have become trained, or at least maybe it's the group that we hang with that have become trained. Yeah, there's the unemployment rate, but it's the number of jobs, right? The non-farm print. And one of the things that I've been struggling with is, do we need to see a negative non-farm print number, right, to get the Fed to move? Because otherwise, we're still, Powell can say, oh, we're still adding jobs, things are still good, because he's sitting out here.
Yeah.
Well, no, I know. Right. No, I agree. But the hard part for the Fed is, these inflation numbers, right? So Powell's talking about seeing inflation creep back in. As we tape today, Tuesday, we got the manufacturing PMI numbers from ISM that actually ticked higher, right? They were 69.4 in May, 69.7. The market was looking for it to come down, right? Now, I realize that you could say, but Chris, that's only 15% of the economy. The service numbers are more important. And they are. But this is...
I think as long as inflation...
Totally agree.
As long as inflation stays below 3%, any worsening in unemployment rate gives the cover necessary for a cut. I think July is too soon, but we could still get it. We had Bowman and another individual.
No, I just don't. I'm just going to say this. I flat out disagree with that. I suspect that those two clowns are jockeying for Powell's position. That's what I think.
I think you're 100%.
Everyone is jockeying for the position.
Yeah, but you know what? To be honest with you, in a perfect world, a non-Trump world, that is a difficult job. Then you layer that on top, you can keep that job. Thank you very much.
But some people...
I think that one of the things that really strikes me is how not many people expect anything to happen in 2025 at this point as far as rate cuts. The Fed's dot plot said 2. Most people are looking at September. Bank of America and Morgan Stanley has said 0. Mm-hmm. What's really interesting to me is 2026 and how aggressive people are. I mean, we've got Bank of America saying at least 1% of cuts in 2026. Morgan Stanley said 7 rate cuts. How horrible is this economy going to be if we get 7 cuts?
That's Chris's negative print.
Yeah, exactly. And then some. Look, we all know that the market has just over the last, 18 months been more aggressive. I'll use my favorite word, hopium instilled, looking for rate cuts, and they've been dial back. So when I see 7 out there, Todd, I just got to shake my head like that's ridiculous. Nobody knows that far out, to be honest. And I think that we'll see them kind of move. It's the same mythical nonsense where forward year S&P 500 EPS numbers are always up 10% until they're not. Right? Ridiculous.
Because the year is always back end loaded. You know this.
I do know that. And I also know, Helene, and I'll use that as a segue, that consensus S&P 500 EPS numbers for the second half of the year are now at 8.6%, right? Second half versus the first half. End of March, 14%. So as I sit here and I think about the second half of the year,
Yeah,
And
you
hang on,
always watch it back to your point.
Right. But now I'm going to flip it, because then I'm going to come to you on this, Todd. So they've come down. Now let's say that the big beautiful bill gets passed. There is some tax relief. We get some trade deals. All of a sudden, could we start to see those numbers move higher in the back half of the year?
Yes. I think 100%. I think you had a massive rethink of forward earnings estimates by Wall Street in March and April, February, March, and April. You had 25% tariffs on Canada and Mexico in February. You have autos at 25%, China 30%, baseline tariff now of 10%. Everybody was cutting their estimates based upon both the hit to revenue and the hit to demand. And I think that now they've delivered them down to levels where the next move is for them to actually raise them up a little bit as they start to get a little bit more comfortable that, okay, this is probably where they're going to work out to. This is where they're going to stay. They're not going to worsen from here. So I can actually start to raise and that is the lifeblood of over time, stocks. I do believe stocks follow earnings over time. So revenue growth and earnings growth over time.
Totally agree. But let me throw a little wild card into you. Okay. So Lutnick has said we could have 10 trade deals coming. I doubt that China is happening. And then based on some of the news about a late July timeframe for Canada, I think it's fair to say they're off the board. So is it possible that the market is underwhelmed by the trade deal announcements that we do get near term?
I think as long as it seems like it's status quo, people will have that off their bingo card. If Trump starts saying it's going to go to 50% on Canada next week because they're not making a trade deal, that's a different story. But I don't think who knows, right? Nobody knows what happens. It becomes guesswork now. But I do think that as long as it's status quo, they won't care look, they didn't care about UK. I mean, the China deal and the UK deal, they were nothing. There's no real there. All they cared was that, okay, it looks like we're stabilizing out at a particular
right.
level. And as long as
so you're saying as long as there's some potential progress and we move towards a new framework over time, the market will wrap its head around it.
Yeah, because in April, May, they were expecting Armageddon.
Right.
So anything less than Armageddon is actually a win.
So, Helene, any thoughts on this you want to share?
Yeah, I don't think the market cares about tariffs.
Ooh, okay.
I've said this since May.
Okay.
Maybe late April. Doesn't care. Market's not even thinking about tariffs.
So if they're not thinking about tariffs, what is the market?
We stopped thinking about tariffs as soon as Trump dialed it back, like a week after Liberation Day?
April 9th.
We stopped thinking about it. We started focusing on the economy. We started focusing on tax cuts and the Fed cutting. What could throw a monkey wrench in? I suppose, as Todd said, if you all of a sudden they start talking about 50% tax rates on Canada or whatever. But whatever it is that takes us down next, it is my view that it's not anything we're discussing right now.
Oh, so some other black swan.
It never is. Okay. It never is. Because if we're discussing it, it's priced in.
It's a great point, Helene, because
Fair enough.
Right.
Fair enough.
If you look back a year ago, I mean, even December, how many people really thought, they talked about tariffs, so he's going to do tariffs, whatever, but it was, it's like.
Did anybody expect that ridiculous formula he whipped out?
No.
I don't think so.
Which is why the market reacted.
Right.
So buy the news,
but
right?
Now if he did it again, would the market react the same way? A little bit. But now it's sort of like it's front and center in everybody's head. And so it's going to have to be something different.
Okay. So let's presume that something does happen. Helene, are there areas of support that you're eyeing in the S&P 500 that people should be watching out for?
Oh, there's a million areas of support. And, my view is we almost always blow through them or never get to them. It's probably more important to me how the index movers act versus how these down and outers act. So let's just say the down and outers who are having a glorious day today come down and they don't make lower lows. That's all part of a basing.
Okay.
Right? if they break and make lower lows, I don't care that they don't move the index. That all of a sudden, all my statistics start to look terrible. My new lows start expanding. The breadth starts getting terrible. And, so to me, that's more important on a pullback is how many stocks are making new lows and are they building bases or are are we going to discover that, again, I'm going to keep talking about Pepsi, but go take a look at Pepsi. It had that big slide. It had a rally in March, I think it was, and then it had a renewed slide. And now it has been doing this since then. And it's having a rally today up out of that little consolidation. If it turns and heads south and doesn't make a lower low, that's going to be part of a base. If it breaks, this whole period in here is just going to look like consolidation before it went lower.
Okay.
I think that's
and I've got a whole and I pick on Pepsi because it's such an easy chart that anyone who pulls it up can go, oh, I see what she means. But I've got a whole pile of charts that look just like that.
Okay.
There's more than one way to work off overbought, right, Helene?
Yeah.
Time or price. But Todd, when it comes to an overbought reading where you've rallied on an intermediate term basis to a lower high, usually that's not as easy. Usually that means you're going to have to do it in price.
Well, what's intriguing too is we are coming into July, which is typically an okay month for the markets, right? It's the strongest of the third quarter, but we are into the third quarter. So, I always look at seasonality just because it's interesting that some things do tend to repeat over and over and over again. And August isn't necessarily a very friendly month. I mean, so, and it does make me wonder, will we just sort of like, if you look at, and I know you don't follow RSI, Helene, but, if you look at RSI, we get above 70 on the S&P 500. It does, or the NASDAQ, our major index. It can tell you that, you're getting a little bit of a warning signal. Maybe you should take your foot off the accelerator a little bit and rein in a little bit of your risk. And I look back the last two times we got a reading above 70 on the S&P 500 in December, and I think we retreated about 4.75%, something like that, over the course of through January 10th, I think it was January 10th or 11th, and then we did it in May again. We got up to not quite 70, 69.97. I don't know if we is that close enough?
We were close.
And we retreated about 2.7% in relatively short order. So it'd be interesting to see to me if we churn sideways to slightly down because of the big dominant players in the S&P 500, as you were alluding to before. The NVIDIAs give a little bit back. Some of these other things that have moved a lot give a little bit back. We turn a little bit sideways. We pull back to maybe, a more a relative strength index that's more neutral. At the same time, we give up maybe in the index 3%, we'll call it. And then by September, are we setting ourselves up for a little bit better of a push into year end if we can buy another low in September or October? I don't know.
Possible. We'll see.
I'm gonna say that one of the things that none of you are talking about that I think we really have to focus on here is the dollar.
Oh my God.
Good point.
Because all of a sudden, everybody is a weak dollar is good for multinationals.
Right.
I remember when a weak dollar was bearish, but okay, now it's bullish. And I think the dollar is bottoming. I've been wrong. I can't help it. I think the dollar is making a low. And if the dollar starts going up, I'm certain the narrative is going to change that a strong dollar is good. But whatever it is, you've got to watch that because that does have an effect on earnings.
100%.
You know what sector it has the biggest impact on, right, Chris?
I'm going to guess you're going to say technology, Todd.
Yep.
Used to be drugs.
59% of sales for technology companies in the S&P 500 come from overseas. So how much of this hope?
Are you saying that there's more to AI outside the U.S. than not? I mean,
I just think that, like, how much of the hope that earnings revisions are going to go higher are based upon the impact of the weaker dollar on technology stocks, and what happens, to Helene's point, if the dollar does find its footing here. It's a 3-year low, more than 3 years. I don't know.
I don't think we've seen consensus expectations for NVIDIA, Meta, Microsoft. Some of those have been revised over the last few weeks to account, specifically for the dollar. I think there are a lot of folks out there going, channel checks are good, yada, 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 but they're not saying anything about that. So I think you're right, Helene. I think, few people are really focused in on the dollar, or if they are, they're not saying
dollar. Let me ask you something. If the dollar becomes from down in the first half of the year primarily to up in maybe not through year end, but in the third quarter, that could turn out to be the story of the third quarter.
Yeah. Because everything else that we've been talking about, in theory, could work its way out before we get through the end of the current quarter, right? So then all of a sudden, what's the new driving narrative? It could be the dollar. Could be something else, but it could be the dollar.
Yeah. So.
Well, as we talk about winding through the third quarter, Helene, a lot of tennis to watch. You got Wimbledon, we've got the U.S. Open. Who are you thinking is going to do well this year?
Well, I'm currently watching Wimbledon. You may notice my eyes keep shifting over towards the
I have. You're watching Wimbledon. I'm watching the clock. It's all fair.
I love the summer months because you start out with the clay season, then you go to grass, which lasts for like this long, and then you get the hard court season. And that I always fear that this little rally we're having in those down and outs that I love so much is going to be like the grass court season. Short.
Got it. I'm glad you connected that.
And it's not going to be lengthy like that hard court season we have that comes after Wimbledon.
Todd, are you a tennis fan, or are you more pickleball in nature?
No, I do like tennis. I used to like to play tennis, and unfortunately, I did a number to my elbow 2 or 3 years ago, and now tennis is dead to me.
Wow.
I don't want to watch it. I don't want to play it.
Jeez.
I too used to play it, and my elbow's not great, so I don't play anymore either.
Why are you? We should have like a street pickleball team. You don't have to move that far. You don't have to hit the ball that hard.
My sister blew out her Achilles playing pickleball, so no thank you.
Do you know what orthopedics surgeons call pickleball?
Money in the bank.
Right. Cripple ball. All right. Guys, before we get out of here, anything else we should talk about? Any big thoughts about the second half of the year, Todd? You want to get off your chest before we have you back on in a couple months?
No, I think everybody should remember that it is summer. Enjoy time with family and friends. The market.
Boy, that is not what I expected.
Yeah, market's going to do what the market's going to do, right? And just remember that good times and bad times, as we learned in April, things can change on a dime. It's just the way the market is.
Helene, anything to add?
Watch sentiment.
Well, I'll say I agree with both of you, but then again, you put it all together, it just says keep coming back to the Street Pro and the Street to see what all the contributors have to say. And with that, folks, that is this week's episode of the Stocks and Markets Podcast. Thanks for listening. We'll be back with a fresh episode before you know it.